Nilesh Shah, MD and CEO of Envision Capital, joins us. He is our friend at all important events. He decodes big events for us. Nilesh, good morning. What do you feel? You think we could see 8,000 post the budget or 7,000?
Well, I think that's probably the most difficult question to answer at this point of time. 8,000 looks very unlikely. I clearly believe that yes, obviously the budget has to come pretty high on intent, but will also have to be high on content, which means that I don't think this is going to be a budget for the next 1 year. This will have to be a budget which will have to roll out a vision document with some more details for the next 5 years in terms of what it has to achieve. And an ideal budget would be that if the economic survey which was released yesterday actually becomes the budget document today. I think that is something which could potentially take the market to 8,000. But otherwise, I think barring that, a scenario of 8,000 looks very unlikely for the day today.
Well, as someone who makes a lot of phone calls and even walks to the North Block, I might tell you that finance ministers don't even look at the economic survey, especially this one. I mean, he had 40 days and he had enough to do on the budget. Unlikely he would have read more than the headlines. But an important peer from your own industry is also joining us. Madhu and Kela is with us. Good morning, Madhu. Thank you very much. Well, a similar question.
Hi, good morning, Lata.
A similar question to you. What will be the top 3 things that you will watch out for to give the budget an A-star, or you know, to expect that the market will end at its all-time highs today?
Yeah. So, good morning, Lata. I think the first and the foremost thing is basically what we saw in the rail budget was the words like concessions, the words like grant, the words like free were missing, and this is the first time that one has seen in the rail budget that these words were missing. So this recalls that, you know, in one of the interviews, Mr. Modi has said that, you know, हम अहमदाबादी लोग हैं, हमसे पैसे जल्दी छूटते नहीं हैं. I think they have lived up to that expectation. So I would wait, I would watch at least in this budget, the government take some real decisive action. Because let's not overemphasize, you know, this one event. Yeah. It's been just 40 days for this government. So they take some real bold path to lay down a 2-3 year roadmap, 2-3-4 year roadmap, both on the fiscal and the economic revival path. So those are the things which will be more important in this budget, rather than looking at whether the fiscal deficit is 4.3 or 4.5%. I think market is reconciled either way. It will not bother about at least these numbers as long as they are in broad range.
Okay. What would be your answer, Nilesh? Exactly what do you think will make the markets happy in the shorter term from the budget speech?
Well, I think in the shorter term, the markets are going to be focused on things like the fiscal deficit and the quality of fiscal deficit. I think that's something going to be a very, very important parameter. But I still believe that the most important parameter is that is this budget going to signal an economic renaissance? Is this a budget going to be like the 1991 budget? Is this going to be a budget which will unleash major steps which will ensure that ease of doing business is achieved? That people come out and set up enterprises, businesses, companies, factories, jobs. So I think a lot of hurdles, a lot of clearances, a lot of those inspector visits and Inspector Raj and all that kind of stuff. Will this budget do away with that? If you really look at it over the last 30-40 days, various ministers of the government have been hinting at all of this. And I think this budget should basically comprehensively encompass all those statements, all those acts, all those intents, and spell it out very clearly in the budget that, look, these are the 50 laws which are archaic and will be done away with. These are the 100 provisions of those 100 laws which are there and we want to do away with. And we are going to do this in the next so many days or next few weeks.
Even if that is their intent, it may be a little tough to think through and thoroughly put it in all the 40 days that they have had for the budget. So, is there, I mean, if you just have to take a bet, is there a chance that today the market will peak off, at least for the short term? For the next 3 or 4 weeks, are we going to see the high today? Or have you already seen?
Well, that scenario is quite possible. I mean, if you recollect 16th May, when the election outcome came in, and the election outcome was truly a surprise, the market did go to 7,500 and closed at 7,200. You know, so it's quite possible that this market, I mean, if it's truly a great budget, it could, you know, even break the recent highs and go to 78, 7,900, and then retrace back, saying is, look, the intent is good. Now let's see how the execution is. Let's see how earnings play out, because the reality is that for the first 2 quarters or so of this financial year, earnings are going to be still flattish, are going to be kind of, you're not going to see a game-changing trajectory as far as earnings go. So I think valuations will definitely play onto the market.
Some of your peers are saying that if there's nothing on the retrospective issues, if there's no clarity, or if it doesn't come out and say that okay, that's gone for now, there could be quite a bit of sell-off. Would you agree with that? If there's silence on that front, would there be a risk of a big sell-off?
I'm not too sure about the big sell-off, but could a 3-4%, 5% shave-off, would that be possible? I think that's quite possible. But I'm not too sure whether that's something which will definitely break this market. I mean, it's definitely an important step. It's an important clarification. It's an important initiative which the government needs to undertake. The budget needs to spell out what its stance is on the retro tax issue and what it is going to do to remedify the situation. So obviously, if that doesn't happen, I think that's going to be negative. But I'm not too sure whether that's something which will break this market.
Okay, by the way, the market has settled in pre-opening absolutely flat, so I don't think anyone wants to take any aggressive positions ahead of the big announcement. But Madhu, hi, good morning. Do you think Jaitley will actually have space for tax incentives for various industries that many are expecting, you know, in order to boost investment, a prelude of which we saw with that excise duty cut extension for the auto sector? And if yes, which are the key industries that you would look at now?
See, Sonia, just to take back to my earlier point, see, basically government has lot of ammunitions in their hands. Just look at, you know, like take for instance, you know, people have been talking that how they can curb this deficit. If they tell me, if they announce even a disinvestment target number of 80,000-90,000 crore rupees, someone like me will still believe that. I think it will be very credible, because you could get 20,000-25,000 crore rupees out of divestment of Hindustan Zinc and Balco. You can do away with your stake on Axis Bank, that can get you 10,000-11,000 crores. You can sell 5% of ITC, that can get you 15,000 crores. And you can do 40,000-50,000 crore rupees of disinvestment very, very easily in other public sector companies. So to my mind, you know, India has a profit and P&L problem. India doesn't have a balance sheet problem. There is estimated to be 5 lakh crore rupees of disinvestment possible, even if the government were to take down their stake to 51% in all public sector companies which are there. So they will still remain public sector companies. So that is what I said, that, you know, this 10,000-20,000 crore rupees of fiscal deficit number is in the hands of government. The question is that it did not happen for last 3-4 years. Whether this budget we can expect it to move. Let me just point out another thing which I saw in another channel yesterday, that there is estimated to be 8 to 9 lakh crore rupees of tax disputes which have piled over the last 15-20 years. Okay, and this includes income tax as well as excise. Now you have, and this will deal with all retrospective. Why only focus on one Vodafone case? Why not take this opportunity and resolve this entire pending tax disputes of over last 20-25 years? And you could get as much as 1-2 lakh crore rupees. And that's what I said, that, you know, as long as the intent is there on the execution, I do not think money is a problem.
Okay.
So I would watch for these events more than watching for that, you know, whether some decimal numbers are here or there.
Yeah, that would be a lot of tax giveaways, though, if all the retroactive acts were to be pushed back. So perhaps immediately expecting so much could be a little tough. At least that's what Menaka was apprising us from all her tax experts. As well, when Madhu was speaking, what you saw was the FM coming out of the North Block with his team. Nirmala Sitharaman was there. You must have seen Arvind, you saw the finance secretary as well over there. So that was the A team, Arvind Mayaram as well, the finance secretary, posing with the finance minister, and all of them getting into the car from North Block to Parliament, that all-important journey. Even as Madhu was speaking, we have yet another expert, one of your important veterans joining in from the market, Akash Prakash, fund manager, chief executive officer, Amansa Capital, is also joining in. Good morning, Akash. Thank you very much for joining us on an important morning. Again, the very same question to you. What will be the top 1, 2, 3 things that you will watch out for you to go out and buy today itself, or for you to consider that the budget has set the tone for the markets to go beyond 8,000 and 8,500?
I think it's a question of the economic vision that that the finance minister outlines. In the sense, I think we've, I'm sure everyone has talked about this in the show already, which is that you want to see a roadmap for fiscal consolidation. You want to see something on how to control inflation in terms of what they do on the agricultural policy framework, procurement policies, and APMC and other things which can bring the food inflation under control. And I think the longer term, bigger vision we need to see is on the second generation reforms in terms of labor, land, judicial reform, a whole bunch of other things. So I think it's the 3 or 4 big basic issues India faces. One obviously is inflation, so they need to do something on the agricultural side. Second is we need to have greater public investment in infrastructure. So you need to have fiscal consolidation, but you need to increase capital spending and from the budget itself. So you need to see improvement on the revenue side. And the third thing would be second generation reforms, as we talked about, labor, land. I think everyone knows, really what is expected and what people are looking to see. The question is, obviously he can't deliver all this in this budget. The question is, how much does he talk about it? In which areas does he give a concrete game plan? And how credible are the numbers and the frameworks that he outlines?
Okay. Akash, hi, good morning. We have 1 minute before the market opens, so I'm going to try and squeeze in one question. One legacy of the UPA that was blamed for putting off foreign investors was this retrospective tax. In that sense, do you think, the finance minister could announce scrapping of that today? And if it comes through, what would your view be?
Yeah, I think I'll be very surprised if he doesn't announce scrapping of that, actually. I think I think in most investors' minds that is perceived to be a serious policy mistake made by the previous government, which will be reversed. So I think it's pretty much already expected that there will be some reversal of that, or some type of statement that we will not move in this direction. If nothing of that type comes, it will be a big disappointment, actually.
And Akash, what about GAR? Would that also be on top of the mind?
I think GAR, from what the previous finance minister, Mr. Chidambaram, I think previously had laid to rest many of the issues on GAR. So I don't think GAR is top of the mind for most investors right now. I think what is important is retrospective tax, clearly. If they continue with what Mr. Chidambaram outlined last time in the last budget on GAR, then I think most investors are fine with that.
Akash, if you can hold on with us for just 1 minute. The markets have just opened. You just have to update on how the markets have opened. 1/3% higher. The Sensex, that's 25,530, and Nifty opening a little over 7,600. So that's 1/4% higher, 7,604. What's the market betting on at this point in time? It's betting on a lot of the infra stocks. Tata Power is high, 1.2. Tata Motors about 1.2. PNB, so again, cyclicals are being betted on at this point. In any case, one saw a lot of profit taking. So Punjab National Bank up 0.7. Bharti is actually up 1%. Coal India, so many reforms expected there as well. It could go either ways, actually, the reforms, but that's up 0.7. Hindalco 0.8. BHEL is actually down, flat really. Jindal Steel 0.3, HDFC 0.6, Larsen 0.3. All these are up. Stocks in the green. Axis 0.2 up. Ultratech, NTPC, all of them up about 0.5%. What's the market not betting on this morning? Lupin, okay, so they don't like the defensives. Dr. Reddy's, Lupin, Cipla, all of them in the red. So today's not a day for pharma, obviously not. IT stocks also not being betted on at this point. Tech Mahindra down 1.2. This is M&M, sorry. M&M is down 0.2. Coming back to the IT stocks, Wipro is down 0.2. Tata Consultancy is flat. And Infi, I'm unable to see over here. What's Infi at? Okay, Infi mildly in the green. Of course, Infi's big day is tomorrow. spectacular, anything spectacular at all, or is it sedate mid-caps?
No, it's very quiet. I mean, you're not getting any kind of trend in morning trade, or in opening trade rather. Even the market breadth is split down the middle. The good part is that we are seeing more advances than declines. So at least there's no negative sentiment at the start of trade. One pocket that's looking good, actually the high beta pocket is seeing some trading action before the big event. So look at IRB Infra, it's up 2.5%, HDIL, India Bulls, GMR Infra. There's some gains, but those are also quite tempered. There are equal number of stocks on the losing side. Look at names like Aban Offshore, down about 5.5%. Texrail, the railway stocks have gotten completely pounded post the railway budget. Texrail another 5% lower. Unitech, Apollo Tyres are all on the downside. So actually, you know, it's sitting on the fence for the market now ahead of the Modi budget. Nobody's taking any aggressive call. Just a couple of stocks that are in the news. Bharti is the biggest Nifty gainer because it has divested its telecom tower assets to Helios Towers in Africa. So that's why it's up. Sadbhav Engineering has won an order worth 150 crores in Rajasthan, so that stock as well is up. But now I think we can go back to our guests.
So actually, Akash, before we let you go, what do you think you would tank up on at all? I mean, not necessarily before the budget, but what are looking like attractive in valuations and most likely to get the government's attention?
Sorry, can you repeat the question? I missed the question. I couldn't hear it.
What kind of stocks or sectors you would most likely look to buy? Not necessarily before the budget, I mean after the budget, but really, what are the stocks that you find interesting today?
I think it remains those sectors and stocks which are, you know, I think which are, you know, which rely on improvement in the economic situation. As I said before, I think that, you know, that you may see a consolidation phase in the market now, but we remain quite optimistic on what this government will do over the next coming 2 to 3 years. And I think the economy will revive and get back to 7-8% growth over the coming 2 to 3 years. So I think those sectors and stocks where currently earnings are depressed and margins are depressed because they don't have revenue growth and they've had a significant contraction in demand. I think those sectors and stocks will continue doing well. A lot of them look expensive right now because they're on short-term earnings are way below norm at the moment. I think that the earnings will come back to trend over the next 12-18 months, and a lot of these stocks and sectors will look far less expensive than they look today.
Akash, what about the specifics in oil and gas? That's one space which is going into the event with big hopes. The sector has been re-rated. Do you think that's something which can still be betted on? Would you take fresh bets on some of these stocks, or would it be a good time to book some profits here?
Oil and gas something we're not really actively participating in at the moment. So I think that there's a lot of, it's obviously a call on government policy there, which I think is moving in the right direction, but that's not something which we have played in a very aggressive way. Neither do we expect to do so.
Okay. Finally, Akash, the budget will be today, and thereafter, okay, we may have other micro domestic events, Infosys numbers and the second quarter numbers, the first quarter numbers. But after that, a lot of attention will be paid to the global scene. What is the sense you're getting? Do you think the markets will remain hydrated given the position of central banks? Do you think India will continue to remain a pin-up market, a preferred one in the emerging space itself?
Yeah, I think India will continue doing well because within the emerging markets universe, India is one of the few areas, it's a bit like Mexico the last 2 to 3 years where there's a new government, more business friendly, scope for significant policy reform, a market which hasn't done that much before the last 6 months. If you look at the last 5 years before that, the market has not done much. So I think it's a country which is seen as having positive momentum both on policy and economic fronts. But I do believe over the next 6 months there is risk of increased volatility in global markets because of oil prices, because of potential interest rate rises. So I think that it's going to be the current level of low volatility globally is unsustainable. So there will be increased volatility internationally, and obviously India will also have to face the consequences of increased volatility. But within the emerging market context, I think India is perceived as having better outlook than most. And I think it is a market clearly which is back on the radar of most investors. So I think India will do fine over the next 2 to 3 years. It'll be a good market too. You will have periods of consolidation, and corrections every now and then, which is normal. I mean, the market's had a huge run. It's up almost 50% in dollars since September of last year. So you're going to have corrections, which is fine. But I think over the next 2 to 3 years, I think the market will still do very well.
All right, on that optimistic note, Akash, Prakash, we'll let you go. Thank you for joining us. By the way, the market is flat, the headline indices, but the texture of the broader market has weakened in the last 10 minutes or so. Names like Aban Offshore, etc. are now down almost about 10-odd%. But let's continue our chat with Nilesh, Shah and Madhu, Kela. Madhu, just come in on your broader term view on the market. I know it's positive, but do you believe that whatever the outcome of the budget today, the market will possibly see a knee-jerk reaction for a couple of days and then resume its uptrend?
Yeah, this is the most important point, Sanya. If you look at the markets from a decisive low it made in August, September, when we saw 5,100, 5,300 range, since then the uptrend has started. And market has not corrected any time more than 10% from the high it made. Okay. This is very, very important that, this is what we saw in the US. For 8 years, market did not correct. Dow Jones did not correct more than 10% from the high it always made. So I think, this knee-jerk reaction of the markets falling 2, 3, 4 percentage points is fine. But as long as the broad market remains, the broad bull market remains intact, and this is what our view is, that we are in the real broad bull market in India, and these corrections are the only opportunities for people to enter. So I think we are just going through one such correction. To my mind, it has nothing to do with rail budget, nothing to do with the union budget, because the markets have gone up 50%. Mid-cap index is up 89%, small cap index is up 80-90%. Market had to correct, and these are just excuses. So I would look at, as long as the broad trend remains positive and the government makes that atmosphere more and more conducive through events like budget, I would still feel that a lot is more to come in the markets in next 2-3 years.
Indeed. Nilesh, would you broadly endorse that view? And even you said that in the near term you don't see that 8,000 coming so quickly. So if the market gave you that opportunity, what would be the attractive buys?
Well, I still believe that the big opportunity will continue to be in areas like infrastructure, agri, financial services. I think this is really the pack which can basically have a disproportionate growth if the economy gets back onto a 7-7.5% growth mode over the next 1 to 2 years.
But when you say infra, do you mean the standard guys like L&T? At the moment, I mean, there are, DMR Infra, for instance, is the top performer, about 1.5% higher. Would you also go to those kinds of stocks?
I think one would still want to avoid asset-heavy businesses. I mean, where you'd probably require several thousand crores to basically construct a port or an airport. I think those should still be avoided. I don't think interest rates are falling off a cliff in a hurry. So I still believe that they would continue to have balance sheet pressures. It is a competitive business. You're going to see a lot of bidders coming in for those kind of assets. But I'd still probably bet on companies which are helping the creation of those assets. So the conventional engineering names, equipment names, cement names. I think these are some of the good names to really watch out for. The fact is they've risen a bit, but they would also correct if there were to be a broad-based market correction.
Nilesh, final question. If excise is hiked significantly for cigarettes, what's the call on ITC? That's one question which is bothering a lot of market participants.
I think it would witness a correction. There's no doubt about it. I mean, obviously, there's been some bit of correction already there in anticipation of a hike in excise duty, but I'd still think that the correction is not done. You'd probably see some more correction. Valuations are significantly high. There's no real strong or compelling reason to own a defensive name like ITC when the economy is likely to expect a very strong growth. So I'd probably think that without even an excise duty hike, I mean, excise duty hike or no hike, I think ITC is going to underperform.
And will you stop smoking? That is also the key question. But we won't ask you that. We don't have time for that. But thanks, Nilesh, Shah, for joining us. And thank you, Madhu, Kela, as well. Those are the views coming in from our experts. This market is moving up higher post the budget. At least that's the word coming in